Hello and welcome again to this particular session. And in the last one, we finished still up to, I think, 52. And now today we are continuing with our Ind-AS series MCQs. So today we are going to begin this particular session with question number 53. Correct? So 53. When presenting the discontinued operation in the cash flow statement, they are pooled with other current asset. No, that is not the case, and they are added to the non-cash item. That is also not the case. They are ignored. It is also not the case. In fact, whenever we present the discontinued operations, they are shown separately. Very simple. And this question 54 is an interesting one. If we have gone through your Ind-AS one, then you should be able to give the answer. An entity shall explain how the transition from previous GAAP to Ind-AS or International Financial Reporting Standards is reported financial position, financial performance, and cash flow. What is the theme of this particular question actually? That earlier you were presenting your what we call financial statements through your previous gaps. Let us say there is an entity and it was preparing its accounts or financial statement on the basis of existing accounting standard. Now it is moving to, let us say, Ind-AS or IFRS. Correct? So this entity must reflect that how this transition is actually affecting the reported financial position, financial performance, and cash flow statement. So correct answer is affected. Correct? How does an entity adopt IFRS for the first time? The alternatives given to you is by reporting on its financial position, financial performance, and cash flows in accordance with IFRS. We have started adopting Ind-AS or IFRS. How an entity actually let it known to others? The question is asking this way. The first alternative given to you is by reporting on its financial position, financial performance, and cash flows in accordance with IFRS. No, as we know that whenever we are going to move from previous GAAP to what we call Ind-AS for the first time, then we have to give an unreserved statement. If you have gone through AS1, you must have gone through this particular statement. By issuing its first financial statement, in which the entity adopts Ind-AS or IFRS by an explicit and unreserved statement of compliance with IFRS or Ind-AS. Correct? An entity need to give explicit, clearly, unreserved statement. Unreserved means without any force, without any foundation. Correct? That means absolutely free of pressure. So clear and unreserved statement need to be given with respect to compliance of Ind-AS. Next question is, which of the following is a starting point for an entity accounting in accordance with IFRS or Ind-AS? What is the transition point? Just to make the point clear, in fact, again, I had explained this point earlier when I took Ind-AS 1, or if you have gone through Ind-AS 1. Correct? For example, there is an entity. An entity decides that from 1/4/2023 onwards, from 1/4/2023, we shall prepare the financial statement as per Ind-AS. Let us say so far this particular entity is preparing its financial statement as per existing accounting standards, and on 1/4/2023, company takes the decision that we are going to move over to Ind-AS. That means this year's financial statement must be prepared as per Ind-AS. No doubt about that. 23-24, this year's statement need to be prepared as per Ind-AS if we have taken the decision without any doubt. However, when we move to Ind-AS, if we are preparing for the current year's the statements from the perspective of Ind-AS, then it is imperative that we have to present the comparative financial year's statement also on the basis of Ind-AS. Even though we have taken the decision on 1/4/2023 that now we will prepare our financial statements as per Ind-AS, because 23-24 financial will be prepared as per Ind-AS, so it will become a mandation upon us now to prepare the previous year's financial statement, the comparatives as we call it, on the basis of Ind-AS. That means last financial year, which must have started on 1/4/2022 and ended on 31st of 3/2023. That means previous year's financial statement now too must be prepared as per Ind-AS. The comparative period's financial statement need to be prepared as per Ind-AS if you are taking the decision in a particular year. So that year's financial statement quite surely will have to be prepared as per Ind-AS, but at the same time, comparatives too must be supplemented, and those comparatives must be on the lines of Ind-AS. So even though you are taking the decision on this particular date that you are going to shift to Ind-AS, but your actual date of transition to Ind-AS will be considered 1/4/2022. This is exactly what the question is asking. Which of the following is the starting point for an entity's accounting in accordance with IFRS? So this particular answer should be the date of transition to IFRS, and you must understand that your date of transition is different from date of decision. Is it clear to you? 57. An entity may elect to measure an item of property, plant and equipment at the date of transition to IFRS. Now, this is an interesting question. Suppose, again, this point was very well explained under Ind-AS 1. Suppose so far I have prepared, at this particular point, let us say I have prepared my financial statement as per AS 6, and property, plant and equipment in the beginning of the next accounting year, or at the end of this accounting year, whatever you may say, let us say is having a carrying amount of rupees 100 lakhs, property, plant and equipment. And let us say we have decided now that from this particular point we are going to adopt Ind-AS. Now, because we are moving over to Ind-AS, now the question is asking you at what value you will reflect the property, plant and equipment on this date, correct? Because now from this date onwards, you are going to adopt the Ind-AS. This is your date of transition, let us say. So question is asking an entity may elect to measure property, plant and equipment at the date of transition. So on the date of transition, whatever carrying amount is there, you have the right to now record property, plant and equipment either at fair value, correct? So you can record it at fair value, and this fair value, or simply at carrying amount. You can consider carrying amount as the what we call transition value, or you can take the fair value. But suppose if you consider that we are going to record property, plant and equipment on the date of transition at fair value, now this fair value will be considered as your cost, technically known as deemed cost, correct? So it's fair value, and fair value will be considered, deemed mean will be considered as cost at that particular date. So that is the point. Next question is, accounting in India is governed by, now you let me know, RBI, Company Law Board, Income Tax Department or ICAI. For God's sake, don't give me any wrong answer. ICAI is your correct answer. As a professional student, you need to know. In fact, in my notes, just prior to the Ind-AS, correct, I have given in some opening paragraphs that conversion of Indian accounting standard with IFRS actually began in the month of April 2015. Ind-AS will apply to both. As we know, Ind-AS applies to both consolidated as well as stand-alone financial statement. Stand-alone financial statement means separate financial statements or individual financial statement. We have already discussed about the total number of Ind-AS so far notified is equal to 41, correct? And total number of IFRS which are notified as of date. Total number of IFRS, actually IFRS in total at this particular moment is 16. 17 is under consideration. 17 is related to insurance, but a lot of work is still going on. It is not yet notified, but the moment it will be notified, then it will be 17. Otherwise, still up to this particular moment, 16 IFRS have been issued, and 16 is actually related to leases. IFRS 16 is related to leases, and its corresponding Ind-AS is 116. You need not require to do 63 or 64 because these are irrelevant questions from your perspective. What item of inventory, 65, what item of inventories are outside the scope of Ind-AS 2? So you should know that work in progress arising under construction contracts will be the alternative, which you will have to answer as yes, because rest of the things are included under are within the scope of AS2. Raw material including maintenance supply, share debenture held as stock in trade, machinery spares exclusively used with the fixed asset. All these are considered as part of inventories. 66 is related to provision. A provision is a liability of uncertain timing or amount. Yes, we may say so, no doubt about that. A provision, we generally make a provision, correct? But we are not very sure that when actually this particular liability will take place or at what time it will take place. So we may say that a provision is a liability of uncertain timing or amount. An entity recognizes a provision only, and so many times I have talked about that under AS 29 and under Ind-AS 37, because AS 29 and Ind-AS 37 are absolutely same. Entity, there must be a present obligation, correct? If there is a present obligation and it is probable that entity will have to transfer some economic benefits, in the sense means there is probability of outflow of funds and the amount can be estimated reliably. If there is a present obligation and probability of outflow of funds is there, and at the same time the amount of obligation can be estimated to some degree of reliability, in that case a provision is recognized. So your answer should be all of the above. Ind-AS 1 is of course related to presentation of financial statement. You need to know all these things. Ind-AS 2 is related to inventory. I need not require to talk about this. Similarly, Ind-AS 7 is related to statement of changes, statement of cash flows. Ind-AS 8 is related to accounting policies, changes in accounting estimates and errors. Such questions may be asked. Ind-AS 10 is related to events after the reporting period. Ind-AS 12 is related to your income tax, correct? And Ind-AS 16, of course, related to property, plant and equipment. Ind-AS 19 is related to your employee benefits. Ind-AS 20 is based upon, there are alternatives given to you. Property, plant and equipment, no. Ind-AS 16 is related to it. Accounting for government grants, disclosure of government assistance, yes, it is related to it, because Ind-AS 23 is related to borrowing cost. So your answer will be B. Ind-AS 21 is related to property, plant and equipment, no. Ind-AS 16 is related to it. Is it related to borrowing cost? Ind-AS 23 is related to borrowing cost. So your answer should be the effects of changes in foreign exchange rates. Ind-AS 23 is related to borrowing cost. I need not require to tell it. And then we have a segment for accounting standards, correct? In today's this particular session, I will take only till up to this particular point, actually just to give you an idea that sort of MCQs you may face. Now, in the next session, we will take up what we call accounting standard objective, that is MCQs on accounting standards, and there are near about actually 70 or how many? I have included near about 70. So in the next session, we may do till up to at least 50, and in the next, or we may try to finish it up in the next session itself, correct? Because if I'm going to start Ind-AS today, it might not get finished up. So that is the reason. So in the next session, when we'll meet, we'll talk about what we call this portion. So for the day, it's enough, and so I'll meet you in the next session.